Hello, everyone. How are you? Doreen, can you hear me? Eric, can you hear me?
Very loud and clear. Hey, Andrew. Hey, Doreen.
Hey
All right.
Eric, hey Andrew.
Hey, guys. Thank you so much for joining. Just so for everyone who's listening to us today, we are still waiting on Stephen. We're in the background. The team is running around trying to, you know, problem solve from two time zones away. But that's all right. We have a very Pan-African discussion going on today. Doreen, where are you joining us from?
I'm joining from Kampala, Uganda.
Okay. Eric, where are you calling in from?
Dialing in from Barcelona, Spain.
From
Unfortunately, got
Barcelona.
yeah.
And I'm here in Nairobi, Kenya, and I know Stephen, I believe he's in Lagos at the moment. So, but without further ado, I would love to hop right into things. So let's start with just a quick round of introductions. So Doreen, I'd love to start with you. Can you tell me what you do, what your company does, and then an interesting fact about you?
Sure. So my name is Doreen Lukandwa. I'm the head of commercial strategy at Onafriq. I would say Onafriq is the largest B2B omni-channel digital payments hub on the continent. We simplify how businesses access the tools they need to send and receive payments from their beneficiaries or customers across over 40 markets, be it through mobile money, prepaid card, bank wallets, or agent networks. As a business, our vision is a fully interconnected Africa where digital payments drive economic empowerment and cross-border payments are simple to access, instant, affordable, and secure. A little bit about me. I'm passionate about all things DFS and enabling that for and across the African continent, which manifests in different ways. So for more information on that, just reach out directly.
Well, thank you. And interesting fact, or did I
Also,
miss
that
something?
was it. So it manifests in different ways, all the way from mentorship to, yeah. So there's
Ah,
a lot of stuff in there.
apologies.
That's, yeah. Just reach
I'm
out
trying to problem
directly for
solve
more
over
detail.
here.
No, all good, all good. Thank you for the
Perfect.
opportunity to
And
unpack that.
of course, and you're available for people to reach out on LinkedIn.
Yes, that's a good way.
Yeah, always a good way. All right, over to you, Mr. Wainaina in Barcelona. Tell me what you do, what your company does, and one interesting fact about you.
Thanks, Andrew. Yeah, so my name is Eric Wainaina, Kenyan native. So for me, I do head the Africa business for Conduit. So Conduit is a B2B cross-border payment company focusing on emerging markets. Our core thesis is that businesses in Africa, in Latin America, where we operate, and in Southeast Asia need to have capabilities as simple in sending money as, say, swiping your card or being able to make transfer via mobile money. We are solving this in those two pockets, and very delighted to be here. So an interesting fact about me is I am an art purist. I can claim to be an art purist, right? Yeah.
Well, awesome. Thank you guys so much for joining today. And when Stephen's able to join us, we'll be sure that he can get his introduction in as well. But I'd like to move things along. Eric, Doreen, you've both been in the fintech space in Africa for quite a while. And I'm curious, over the past 5 years, what has been one of the biggest changes you have seen within the industry? We can start with you,
Eric, would you
Doreen.
like to go? Oh, okay.
Or
Doreen,
Eric.
no problem.
Sure. I think some of them ultimately include, increased digitalization of business payments, beyond the traditional P2P, which is pretty much where this journey or the story began. I think the other big one is atomization of different services under that scope. So you have a lot more specialization and niche products and services coming to the fore, with tailored sort of customer experiences, which I think has been a great incentive for people to go digital or to adopt these kinds of solutions. Ultimately, the rise of interoperability. So you know your multi-market, multiplayer transactions, and the use cases that have been built off of that. I think certain things like, you know, governments taking on digital IDs to drive inclusion or, you know, increase penetration in that way. And things like enhanced fraud detection and customer service automation. So yeah, those are some of the thoughts that come to mind.
Okay, Eric?
I think for me, looking at it more from an atomic level, the sort of like two biggest themes have been, like Doreen stated, a lot of regulatory clarity, just government getting a bit more deeply involved, policymakers getting to give direction on what they expect the industry to look like. And in essence, that has really, really fostered innovation. You got a lot more folks building interesting solutions, whether it's in embedded credit, to things as interesting as buy now, pay later. But then another even bigger theme has been the level of investment that has gone on towards the African fintech industry. And I do think that has really led to the explosion of growth. So when you look at potentially the 10 biggest investment deals that have happened on the continent, majority of them have been either in direct fintech companies or fintech adjacent companies. And I do think that just tells you that the level of financial inclusion that is happening on the continent from both an individual business level is really, really large. And I do think that, to me, is a big stamp of authority at what the industry is going to look like, and that we're just getting started in terms of being able to grow.
Yeah, you know, this is like it's like what Benji from Nala often says, you know, payments in Africa are 1% built, and I do believe that. You know, we're still very much in the early stages, but you know, for people who've been in the industry over the last 5 years, you know, 5 years ago, a lot of people were putting a lot of time and effort into payments, and people still continue to focus a lot of time on payments, treasury, you know, the kind of fintechs that maybe the common person never hears of before. But nowadays, you know, we are starting to see a lot more on the use cases side as well, which I think is incredibly interesting. And once Stephen gets a chance to join us, I'd love to pick his brain on those use cases side, because that's a lot of what Kora does. Now, you know, the fintech industry, it is very broad. As I just mentioned, you have companies that move billions of dollars, and you'll probably never hear of their names or know of them as a common consumer. But then there are other businesses that are very consumer focused, consumer centric, and you interact with them on every day. I mean, for here in Kenya, that's the likes of M-Pesa and such. Now, before we step into the topic of fintech trends and such too far, I would like your help in understanding how different fintech companies work together. Essentially, how does money move around between people, between companies? How does that global ecosystem of money infrastructure work?
Eric, do you want to go this time?
Yeah, sure, no problem. I do think the sort of like the money movement space to me is fascinating, because when you try to look at it from a historical perspective, it all began with trade. So we traded in Kora shells, and we started to trade in gold. Then we did a lot of, before gold, we did, of course, a lot of barter trade. And so the money movement sort of like space is deeply shaped by whatever trade looks like. Now, when you come to the continent, we do have, of course, the history of colonialism. And so what happened with colonialism is the financial infrastructure was built in such a way that it was focused more on the extractive side. So repatriation of funds back to the mother country, to England, to Spain, to France, and not largely around sending funds back down. And so when youth then come one level a bit lower to like the present day around what the money movement looks like, you do have, of course, the traditional infrastructure, if we can call it that, which is whatever banks have been able to premise. And the banking infrastructure, once again, is largely focused around A, trade, and B, credit. And then you have to now get to the next level, which you have companies such as Onafriq, Flutterwave, and the rest that are trying to solve for these very, very critical challenges around, okay, then if you are holding this value in whichever shape or form, whether it's in your bank account or in cash, how do you get it to move around between individuals? How do you get to pay for goods and services? How do you, so in essence, when you look at it from a broader perspective, all those sort of like touch points represent avenues for friction. And so to me, why technology is a very, very critical pillar is because it is able to solve and reduce, sort of like cut down that friction. And what do I mean by this? It is optimizing for speed so that I can be able to send value to another user, to another individual, to a business in a very quick and rapid way. It is solving for trust because one, again, I can be able to query whatever balances I hold, whether it's in my bank account, whether it's in my digital wallet, and be able to see those balances very, very easily. It is solving for the legal, regulatory challenges, compliance processes that, again, are critical to sort of like the money movement space. And so in a nutshell, I do think that in a nutshell, and to answer your question, I do think that the money movement space is really, really broad, but then it's all about the movement of value, whether to a business or whether to another individual, and then broken down into all these caps depending on whichever vertical you're looking at it. Yeah, Doreen.
Okay, thank you. Before you go, Doreen, I just wanted to mention, Stephen, thank you so much for joining us today. How are you?
I'm fine, thank you. Sorry I joined in late. I'd actually been in the room before the meeting started, but I was in the general room. If you check the chat section, you'll find I dropped a comment there. Apparently, I used the general link.
I saw the comment, so I was able to figure out how to add you. But it's all good. We're all better. You're joining. Where are you joining us from?
UK.
UK. Okay.
Yeah.
Awesome. Awesome. And real quickly, can you tell us what you do, what your company does, and one interesting fact about you?
Okay, so I'm Stephen. Stephen Oluwatobi is my name. I'm the COO of Kora. So Kora is basically a technology and payment infrastructure company. Our focus is majorly working on eliminating every possible digital financial barriers that will not allow businesses to scale across Africa. So we focus majorly on Africa. We are majorly a B2B company, and we help to serve businesses to scale across Africa. Concerning what's interesting about me, I don't know. What I consider interesting is majorly tailored to me. I just like to lock myself in to figure things out. That's how I've lived my life, basically, yeah.
Okay, well, thank you for that. Thank you for that. And, looping back to where we were in the conversation, Eric was giving us kind of a bit of an overview of how the international financial system works and where fintech, is applicable and plays in there. Stephen, for you, in that value chain of fintech, if you think of global fintech, it's really like the transportation industry. You have your large ships, which move containers. You have trains, which can also move containers. You have trucks. You have delivery people. There's a lot of different moving parts throughout the ecosystem. So, Stephen, where does Kora play a role in that international financial ecosystem?
Okay. If you recall, as I mentioned to you, what we really focus on at Kora. So what actually drives us is the continent of Africa, to be very honest. And I can share a bit of story about it. The CEO and founder of Kora had an experience, at the early days of his journey of entrepreneurship. And I'm just giving you like a backstory as to what even led to some of the things and factors that influenced the creation of Kora. Being entrepreneurial, I mean, moving from Nigeria to Benin Republic, which is a neighboring country to Nigeria, because I mean, producing clothing in such markets, was a lot more affordable. As an entrepreneur, you want to make sure you're producing at the least possible cost, and then when it was time to pay salaries, it was a huge pain to pay salaries. I mean, using the usual, payment transfer methods from Nigeria to Benin was a long process. I mean, for 2 weeks. I mean, this is far back, sometimes 2013-ish. It was quite a long process. Making that payment was really a complete failure. It was even a lot faster to get on the bus or get in a car and then drive and cross the border and then make the payment and come back. That was how fast it was to make such kind of payment. So
Wow.
if technology was not going to solve the problem, then what then is the purpose of technology when technology is supposed to enable things to be cheaper, smarter, faster? So these were some of the pain points, that inspired us to focus on, can we even focus and solve the problem of Africa where payment is concerned? And so at Kora, we just focus on getting Africa interconnected and getting that interconnected Africa connected to the world. And as a result of that, what we try to do is get into new markets, figure out what the regulatory requirements are, work with the regulators to get our licenses and the required requirements, look at the local players in the market, partner with already existing players, and then we start to serve our merchants, and then we help our merchants also get across, the African continent. Of course, there is the need also to consider the outside world, outside Africa. We've seen a couple of experiences where even foreign organizations, looking at working with a lot of African businesses. So we've been able to enable a number of foreign companies. When I'm using the word foreign because they are non-African countries, businesses from such markets. We've enabled them also to get into the African market to be able to facilitate transactions as well. So I think it's a growing opportunity, and we're seeing a lot of growth in our numbers, which of course reflects the fact that there is some level of growth in that trajectory.
Okay. And you had mentioned getting people paid across borders and such was one of the big challenges that brought about Kora and such. Doreen, Eric, I'm curious from your end, what direct challenges are you working to address within the fintech ecosystem? And then where do you see, there may need to be more focus in ensuring that, money moves efficiently, effectively, and the same amount of money sent shows up?
Yeah, so I'm happy to go next. So I just want to respond to sort of the question that both Eric and Stephen have answered just now, just to provide a bit more clarity in terms of the role we play in that enablement space. So what that looks like for an aggregator or a company like Onafriq is that in each of the 40 plus markets, we literally have to create accounts with each of the mobile money players, mobile money operators, banks, or in this case, card processing companies across these different markets. So it's each market with all its respective players, typically starting with the one with the highest sort of market share. And so in creating that's sort of like the domestic level, tier one. The next level, which would be tier two, is then creating some sort of formula or mechanic for those different accounts that we've set up domestically to speak to each other. And so what that looks like is us providing or extending our partners APIs that they can then plug into to move money from one country, one currency, one mobile network operator, or one bank to another in a different country. And the burden of, compliance, regulation, security, tax compliance, whatever it may be, then falls on us. So we take that responsibility and pain away from, business owners of these entities to then focus on growth while we address the payments challenges that are experienced across, a fragmented market. So that's in response to that question. And so, in speaking to the challenges that are faced around that, of course, there's the high risk around KYC. You're now looking at different databases, one customer leaving one country and using a different identity in another. So that's a big one, the increased risk of cross-border payments and, digital payments at large. There's the complexity of navigating data privacy, as you think about who gets access to what and who is entitled to share that data. When, how, who. So there are a couple of questions around that. For a multi-market entity like ours, of course, is navigating multiple regulations and having to comply with them, so our partners don't have to worry about that. But with that also comes the fragmentation around treasury services, which and volatile currencies, which impacts the cost of service to the last mile consumer. And I think one of the other big challenges is, just finding the right entry into any given market, because, across the continent, we know a lot of these markets look very different once you get on the ground. So, you can't compare Nigeria to, say, South Africa, and yet both are bank-led. You can't compare Kenya to Uganda, and yet both are very, heavily mobile money dense. So there are different nuances that you do have to factor in and navigate. And I think those are some of the challenges that come to mind. Thanks.
Okay. Now, I'd like to keep the conversation moving. Now, for everyone who is listening in, if you have any questions, please add them in the comments section, because toward the end, I'm going to select a few of them, and we're going to tackle them as a team up here and get you an answer. Now, I want to loop into something. Now, recently I saw FinExtra and Kora had published a report, the Future of Embedded Finance in Africa 2025 report. We'll be sure to put the link to download that report in the caption on the YouTube video and in a few social media posts as well. But one of the things that stuck out to me when I was reading this during breakfast on Tuesday, and it was that embedded fintech, embedded finance products have a real opportunity to drive financial inclusion. Now, for me, while financial inclusion is great, I feel it has little use without also having a financial literacy aspect to it. Now, what role, and this is a question for anyone, but even in particular, Stephen, what role should fintechs play, not only in advancing financial inclusion, but also financial literacy?
Okay, I'm supposing I'm to go first since you mentioned my name first. No worries. All right, so I think the journey actually never ends. The reason why a business is a going concern is because there are always problems to solve. You wouldn't say, "Oh, it's time to now close down this business because we've solved all the problems that we need to really solve," and then let's close shop. That never happens. If that happens, maybe as a result of maybe insolvency or something, or some other reason. But in terms of this, one of the major challenges, of course, that we continually face in Africa generally, even globally, not just Africa, is this whole idea of financial literacy. And of course, it has an impact in how businesses, will thrive and all that. And I totally agree with you that it's a challenge. And I also agree with you that fintechs, payment processing companies, banks have roles to play in ensuring that we improve the level and quality of financial literacy, because in the end, it's going to affect in a good number of ways. And these are my thoughts towards this. Number one is the journey never ends. Meaning, fintechs have to continually invest in educating people generally, whether they are merchants, whether the general public, whether the users, in every possible way, whether by events, whether by their products, whether by their articles, blogs, social media. I mean, the education never ends. Because I mean, it's still about transacting, and in the end, everybody wins. All right. How do you get someone to use your product? And financial literacy in this case, considering that even money in this age is now digital, is not just the piece of paper that will call money. Money actually is numbers now. We receive them as SMS alerts, we receive them as credits and debits, numbers changing on our apps, which means that there is need also for continuous protection, cyber-wise, or cyber security, just to ensure that our monies and all our assets, digital also, are secured. And this is me linking financial literacy also to digital literacy, because our monies are now digital. And the education spans beyond just, using your money effectively, or saving your money and resources, or possibly even allocating your resources or making payments. It also involves ensuring that we're building the first line of defense, you being the first line of defense by ensuring that there is no loss in any way. And in this case, I'm referring to security. So it's not really the software that actually secures, even though we have the softwares, do the security. The bulk of the security comes from we humans, because we are the most vulnerable in this particular context. And so we have to continually educate. So every month, what we even do at Kora is to consistently educate all those we serve, all our merchants. They get an article from us every month, a newsletter from us every month, focused strictly on financial literacy and digital literacy, particularly focused on cybersecurity. Because I mean, it's our responsibility to ensure that they're also secure, because the decisions they make also affect. So we try to expose them to how AI can lead to an exposure or some form of loss or fraud, or exposure to some form of theft in some way. We also help them to understand what phishing really is about. We help them understand, what social scamming is all about. All this, we consider, because being a fintech company, we must understand that financial literacy spans beyond just the whole idea of savings, investing, insurance, and securing assets, whether digital or physical assets. So the journey never ends. It helps us, and it's a win-win in the long run. It helps them, it helps us, because I mean, it reduces the extent of damage, and then we're able to also, deal with the whole concept of bad actors. So I believe fintechs have roles to play, continually educate. It could be in form of articles like we do at Kora. It could be in form of events just like the one that Kenyan Wall Street is organizing right now for the general public to learn. It could be in form of social media posts. And it could also be in form of products that solve like real problems. So I see that a number of the fintech, because I try to fiddle a lot with fintech apps just to learn and see what's happening in the markets, what's the new fad, what new solutions are there, while we also have R&D innovation sections that helps us to figure out solutions that can help to advance value for all those that we serve. So I believe it's a continuous journey. It never ends. We have to keep doing it. We invest for it. At Kora, we invest for it. And I recommend that fintechs also do same, because we deal with the whole concept of bad actors who take advantage of, particularly in Africa, because this happens a lot in Africa. It's just normal that any society where it's tough and difficult to survive, and people will find the easiest ways to see how they could take advantage of other people who are ignorant. And what we can do with ignorance and damage ignorance effectively is to provide knowledge and keep educating, which you call financial literacy.
Okay, well, thank you for that. Eric, do you have any thoughts on that? Eric, I'm having trouble hearing you. Is it my end or?
My apologies. Yeah. So I think an interesting touch point that Stephen added is about that the journey never ends, and I feel that if because the journey never ends, then you have to build all these interesting touch points of access, right? And how do you build these points of access? So you have to meet the consumer where they are. You look at what our continent looks like at this very moment in time, growing smartphone penetration, but you still have a very huge number of folks who still have entry-level devices. And so then how you build this, in my sense of it, is you build very user-friendly solutions. So whereas having potentially apps is great, maybe delivering these services via USSD could be the easiest, closest touch point that a consumer can be able to do it. Two is, again, to still on the same point of building sort of like this access, is how can you embed sort of like these learnings inside of your product workflows, right? So you tend to see a couple of banks, a couple of telcos having that sort of like workflow, the learning workflow within the USSD. So you dial whatever number it is, and it gives you this expansive menu that, again, still serves as a touch point for education and for curiosities that a user can be able to go in there, learn about themselves. And I'd highly commend, again, folks and businesses in our industry, because when they realize there's big challenges around fraud, then they have to, again, start to look at what's the easiest way to mitigate fraud. Biometric voice is one of the potential ways that you can be able to do that. And so majority of them, again, embed those workflows. Now, we consistently do receive messaging and information around keeping your information correct. And increasingly, which to me, I think is a very big lever, is you're starting to see delivery of, again, education around savings and investment, still within areas with which are very, very accessible to the normal consumer, or actually to the everyday consumer or the everyday user. And to me, I do think that's the only way we can be able to build a lot of, you can't divorce the two of them, but I do think by consistently building more channels, it gets a bit easier, gets exciting, and of course, it's a big driver for the bottom line of fintechs and banks and other players in our industry.
Okay, interesting. Now, Doreen, I know you had mentioned that Onafriq is an aggregator. You work, your job is to work with everyone, pretty much. I guess that's the most simplistic way to put it. And I want to pose this next question to you first. As the fintech industry, you see, people are often, hey, we're going to disrupt finance, we're going to change all of this, but in reality, there's a balancing act between competition and collaboration with traditional financial players, regulators, etc. So my question for you is, given the role that fintechs can play as a mediator between different financial industry stakeholders, how can fintechs balance disruption while also collaborating with various organizations and institutions?
That's a good question. I think it also in some way ties into the question you just asked that the two speakers spoke to. And I love the responses. I think I would just, in the same context, I would add that there is value in the collective, right? Because financial literacy is not a one man's job or a one entity's job. It does require all the stakeholders that you've mentioned sort of come together, understanding what that long-term vision is, what that goal is, and which is ultimately deepening penetration for economic growth and empowerment. So I think one of the things I would encourage is, maybe fintechs coming together through some of these associations and other ways in which they can lobby, to be part of conversations around digital and financial inclusion strategies. But also just keeping this conversation at the fore, because if without financial literacy, we will always struggle to have a big enough addressable market because you're competing with cash. So until people understand best practices around what they could do or what they could benefit from all these different services, it'll always feel like we're pushing against the grain. And And to add to that, I think that finding a balance between all these different stakeholders is, again, it goes back to that long-term vision. What are you trying to achieve? Stephen spoke to, compliance in all these different markets and things like that. So knowing that to build trust, to build credibility, and scalability, while keeping your operational costs low, but being able to give the utmost value and increase the lifetime value of your customer, enter new markets, etc. You do have to have these different conversations, because that's what builds out the ecosystem. Every party in this ecosystem plays a critical role. And so while we are in a rush to change things for the future, we cannot negate the fact that the past exists. The way that things were done or are done through banks exists, and there's a strength in that. So when I think about, for example, our relationships with financial institutions, we still need them for FX, for treasury services, to be able to provide our business partners with quality settlement and pre-funding. You do rely on banks in certain markets for that regulatory cover, whether you're issuing cards, to mention but a few. So there is a world in which we coexist. So it's not, in my opinion, it shouldn't be a competition, even though many times it's perceived as such. But also when you look at it from a regulatory point of view, in many of the markets where this is working well or is growing steadily, there is collaboration between the regulator and the financial actors, because the regulator is getting a better sense of what needs to happen and why, and how it's going to impact, the economy in one way or another, but not just for the short term, for the long term, because numbers don't lie. They can see the impact that fintechs are creating over time. And so I think that the only way to get to promised land is to work together. The only way to work together is to understand what that value proposition is for all the actors in the value chain, and also understanding what role each of those actors has to play, and how that will, in the short, medium, and long term, impact that fintech's business or every actor's business. Yeah, that's my short answer.
Okay, thank you for that. Now, back over to Stephen. With your recent embedded fintech report with FinExtra, I was curious kind of what insights from that can you give us today, and particularly, in answering the question, what impact do you expect embedded finance to have on MSMEs and on entrepreneurs across the continent? How is embedded finance making the lives of MSME owners easier? Stephen, you're muted.
Right, you're right. I'm muted. I'm muted.
Oh.
Thank you.
Good.
I think there are a number of factors. More details definitely can be seen in the report, but off the top of my head, right now, how embedded finance will basically enable SMEs and entrepreneurs, you say, and those two for us are very, very key. Those groups, small businesses, entrepreneurs, because it syncs with what our vision as a company really is about. Because we were there, that's how we started. Our pinpoints, just like the story I shared with you, was part of what inspired us to find the problem we really want to focus on and solve. Go back in time, let's say about 15, 20, even plus years ago, how easy was it to actually start a business or to become an entrepreneur? And how easy is it now compared to then? What even makes an entrepreneur? In my world, I would just summarize into three things. First is your ability to create value effectively, that whether in form of a product or a service that people can buy. Second is to be able to package it well and deliver it well, which of course African entrepreneurs have been able to do effectively. But the third one, which had been a major issue, had been how do you get paid for this magical value that you've created and you've packaged and you're willing to ship? That'd be the problem. Now, fintechs, came in to try to solve that problem. And of course, to be able to run a fintech, particularly infrastructure based, there are lots of moving parts. There's a lot of cost involved. Softwares that need to be built, plugins that need to be built, APIs, lots of things come into being here, and they're quite expensive. What will make embedded finance really good and smooth for entrepreneurs is the fact that now they get the chance, whether being a player in fintech, or whether enjoying it from the beneficiary viewpoint in terms of enjoying a service. It's basically being involved in financial services without being in financial services, because right now you can leverage on those who provide the payment infrastructure like Kora, and then you can just plug and play and then enjoy the services, whether it be e-commerce. So somebody wants to sell maybe shoes, and I see a lot of that happening in Africa, right? And then they set up like a website where they could sell stuff, and then all they need to do is just to plug in stuff that can allow them to collect money, right? We have a number of merchants, for instance, now some of them who are dealing in logistics, and they provide services on their own, and they do need to start setting up afresh certain infrastructure to allow them to collect money or to provide some form of financial services, whether in terms of payments. We have those who also support credits for their customers, right? They don't need to go ahead from scratch to begin to build the required tools or get the required licenses to be able to provide such services to their customers or to their merchants. All they need to do is plug and play. And that's what embedded finance really is about, right? That is being able to plug in financial services into non-financial services. So someone in agriculture can still be involved in finance by leveraging without having to go from scratch. It's a lot of journey to start that whole journey from scratch. Is it from the regulatory viewpoint or the technology viewpoint, right, or the pervasive viewpoint? So there's a lot involved in that. So now in this age, what embedded finance and the supporting parts, courtesy of payment infrastructure companies that help to provide such infrastructure, making it easier for businesses and entrepreneurs to be able to, move into that direction. It makes it easier for an entrepreneur to have a vision to achieve something, and then, start what they want to start and then plug and play. So anybody can basically start a company like today after following the whatever regulations incorporating the company LLC, right? And then you set up your website, and then you deliver your e-commerce service, or you deliver your logistics service, or you deliver your ride-hailing service, whether it's an individual or whether leveraging on a platform like Uber where you can scale. Uber itself, by the way, is leveraging embedded finance because it's a form of ride-hailing. So I see this enable a lot of entrepreneurs to scale their businesses a lot faster, because they cannot only they're not just limited to creating value. Now they can ship value and then get rewarded easily for their value. Not like the experience I shared with you, where you needed to travel and cross the border or wait for 2 weeks for Swift to deliver your payment for whatever value you have delivered. I mean, that's kind of like a long journey. So now we can get things a lot better. And I consider this an amazing innovation in Africa, courtesy of what Africans are doing across board, because now it allows us to unlock wealth a lot better. It allows us to capture data a lot better, because now even businesses can measure and they can see the numbers. They can track their key growth metrics to know their transactions volume, their transaction value. They can know who is who, understand their customers better because they're collecting information and data. So I see a lot of things happening here that can help entrepreneurs to really scale. They even better make data-driven decisions that can help them to scale a lot better. And that's what building a business is about. Building a business is really about making very strategic decisions. Your business will go in the direction of the quality of decisions. You make bad decisions, it goes down. Make decisions, it goes up. So quality data helps entrepreneurs to be able to make quality decisions that can help them to build better businesses, unlock more wealth, hire more people, pay better salaries. Everyone, gets paid. Families, enjoy the impact. They can send their children to school. So the impact kind of like is limitless. And this is what we see that embedded finance can do. So that's what I see.
Yeah, I think that's really interesting, for say me as a non-technical founder, if I wanted to start, a full e-commerce site, or I want to build, a company that requires a fintech element, I can use no code tools. I can use various plugins that require little to no coding experience to actually bring it, to market and such. I think that is, absolutely massive. One of the biggest barriers to entry for a lot of companies has been historically technical knowledge. And I think, with no code tools and such, that really plays a big role. But before we move on, I want to ask Eric, Doreen, do you guys have any thoughts on this trail?
No, you can move on.
No. All right. I just want to remind our audience who's listening in, if you have any questions, please add them in the comments section. We're going to go through them here in a little bit. The good ones, the good questions, none of the crazy stuff. Sometimes you see something wild come through the comments section, but it's all good. So moving forward, I want to retouch on the topic of policy, because as fintech companies, you are often, walking the line between maybe customer satisfaction, customer demands, and regulator demands. How do you balance those conversations when you are speaking with various stakeholders in the industry? And do you think there are any particular policies that could be put in place, maybe from a country or a Pan-African basis, that would absolutely unlock the potential of the fintech industry? I'll start with Eric.
Yeah, I do think that generally from, like Doreen previously stated, the fintech space being one of the fastest growing sort of like subsectors of any economy as a sector of the ICT industry, governments have realized the potential. They've seen the value when you look at it from an investment perspective, the number of jobs, the impact that mobile money companies are having. And so there has been really deep concerted efforts towards ensuring that they ring fence those industries, because again, governments are still major stakeholders in potentially every other, say, telco, which again then end up owning some of these mobile money companies. So there's been a lot of effort, and they've been very, very keen on ensuring that that is happening. But of course, it would be great to have a bit more of quote unquote deregulation, particularly around wealth management and wealth tech, just so that we can have more African saving, more folks getting access to deeper and different financial services. So I'll give an example of, I know majority of the countries in the Eastern African region have a minimum threshold about, say, how much you need to have to buy a stock, or how much you need to have to buy a bond. And so sort of like just lowering that barrier of entry so that you can have more people going in. But then coming back to your bigger, broader question on how sort of like to enhance and bring this stuff together, I do think one of the most interesting ways to do this is to do it via trust and transparency. So I would say our ecosystem is very, very interconnected. It's very hard. And I know Doreen again mentioned this point, for you to build a company in isolation as a silo. So you will need bank partners for your treasury management. You will need other fintechs because maybe they do cross-border payments and you do not. And so it's a very, very interconnected space. And the easiest way to do that is, again, to build this with utmost trust. So with the regulator, keep them abreast about what you're doing and the way you're thinking. With bank partners, for instance, is with utmost transparency. The worst that they could say is say and no, but in most cases, they will, again, listen, versus building this stuff or building whatever you're thinking about building, and then running into crosshairs with them without having, again, been truthful, spoken openly about whatever you're thinking about it. So I do think that sort of like concerted effort to bring in both the regulator, to bring in bank partners, to bring everyone to the fold and sort of like create this harmony is a big level of it. Second, and I do think I would give very, very major props to Nigerian fintechs because they tend to do this. It's sort of like doing this via a hybrid approach, right? So I would say you will see folks thinking about building a solution in B2B cross-border payments, for instance, right? But then if the barrier to entry to build such a company or such a solution is really, really high, then you find the easiest pathway to entry and then build up from there and keep percolating up. Potentially could start off with a merchant service that is not too complicated, that allows businesses to be able to receive payments, do their own reconciliation. Then the next layer becomes your businesses or your customers need to make payments to the suppliers globally. And so what you have done, both with bank and the regulators, is again have this track record about what your services are and why it is necessary. Because I don't think regulators are problematic per se. I do think what they worry about is people going in and breaking the canonical thing that regulators are supposed to ensure that it's maintained, which is trust with the consumers and with other businesses. And so I do think that that's one of the other easy pathways that we've seen, and we've again seen more fintechs begin to do. Finally, I would say on the policy point, again, to ensure that it continues to sort of like happen, is for, again, fintechs to build very, very localized solutions and have very, very localized plans. So like Stephen was mentioning, so if mobile money is the native payment method in your country, then it doesn't make sense to go build a card scheme led product, which again causes or leads to different. I'm not saying innovation, you shouldn't innovate that way, but I'm saying I think it's prudent as an innovator to again be very, very understanding of who your consumers are. And why is that? Because government regulators build rules for consumer protection by and large, right? And so whatever policies that you need advanced in with whatever solution you're trying to build, they again need to follow sort of like this pathway. So, and how they can only follow that pathway is by you building very, very localized tools, localized solutions in that sense. So by and large, to your second question, to your first question, sorry, I do think that's the only way we can be able to get there. And onto your first question, I do think I would love to see a lot more stuff happening in the wealth tech space, just so that we can be able to unlock a lot more value. And I think regulation will go a long way in making that happen.
Okay, and this is for everyone. Have you heard of this concept of like licensing passports and such? You know, one of the biggest challenges in scaling a fintech across Africa is going through the licensing process in each and every country. That can be an incredible challenge. So I'm curious, you know, have you heard this term licensing passports before? You know, do you think it has any potential on a Pan-African basis? And then how would we get everyone to agree to that? I think that's the hardest part.
So I'm happy to go first. So in my opinion, that is probably where we want to go, especially as, you know, globalization takes root, as, you know, there's a lot more trade within the continent, to mention but a few. I think that's where we want to get to. Is it something we can achieve in the short term? My immediate answer is no, because of the experiences we've had in multiple markets. Because turning around one license requires quite a bit of lift from the fintech. So my fear with trying to achieve a Pan-African licensing system in the short term is that it could take 5 to 10 years just to get success there, which would slow down everything that fintech is about. You know, we have challenges coming up in real time. and we need to be able to address those in real time. And I think one common theme I'm hearing, on this session between Eric and Stephen is the power of localization, starting domestic before you go beyond borders. Because if you think about, for example, the Onafriq setup, it is a function of domestic as layer one, and then, adding the cross-border piece as layer two. So you need a foundation. So I think that it's somewhere that we could get to and should aspire to and should continue to have the conversation, but it should not be the thing that is holding back this agility and evolution and innovation. That's my 10 cents. Yeah.
100%. And just to add on to whatever Doreen is saying, one of the biggest, from my experience, one of the biggest pitfalls that I've seen a lot of African fintechs and even African companies doing is you start off your business, have a couple of customers in Nigeria or in Kenya, and your next thought process is, how can I expand into Uganda, or how can I expand into Ghana? There's nothing fundamentally wrong with that. But I do think that it takes away from you being able to build a very, very deep and critical base, right? And there's nothing, again, fundamentally wrong with international expansion, quite large, because it's, of course, always great to build a global and a multinational company. But I do think if the roots are not very, very deep in your mother country, then it becomes very, very hard for you to even expand really, really well across the board. Now, bringing it down to fintech, my controversial take is I do think I don't even think we need that passport in a sense. And here's why. I think we do as an organization, as an ecosystem, we do need as an ecosystem, rules that are very, very clear. Then remember, we are a continent of 55 countries, thousands of different regulators, sub-regulations and sub-rules and meta-rules, and so different, not even close to monolithic. You're Francophone, you have Anglophone, it's very, very different. So if we are to try, like Doreen was saying, try and build one sort of like bulk passport around rules, then we essentially end up stifling innovation. The main reason why our companies all exist is because, again, we're realizing that whatever rules that exist potentially in one market are a hurdle that is, again, a hurdle for our customers, right? And so how can we, again, start to infuse that? So it ends up becoming problematic. Then two, and finally, we are countries of different populations. So if I'm targeting 200 million people in Nigeria versus, say, targeting 10 million people in Rwanda, I would imagine that's a population, then the rules need to be a bit different when you think about it. The rules need to be a bit clear. And so I don't know if one global master regulation is going to give each and every other sort of like, it's not going to even the playing field, both for innovators and for the consumers that we are eventually targeting. Case example is in the US, where you have every different state having its own money transmitter license. But then when the financial crisis happened in 2008, and you have Dodd-Frank as sort of like the law around financial services, one of the consequences of this federal rule, is it ended up decimating community banks that were, again, drivers of financial innovation and financial inclusion for communities, for individuals. And so the problem with sort of like this global Pan-African rule is, again, it could be meant to help promote merchants who import, for instance, goods from Benin, rice from Benin, and they live in Nigeria, and then it ends up decimating potentially whatever avenues of sending value that they have amongst themselves. And so I know I came out sharply opposed, but it's just my thought process about seeing that as a stifler of innovation versus being an enabler of it.
Okay. Stephen, do you have any thoughts? Sorry.
No worries. I was just gonna add that I think something to watch out for is, the rise of these regional switches, which is ultimately bringing together multiple markets, a wide array of nuances in each of those markets. So it would be interesting to kind of observe and see what that trend looks like over time and where we would probably have the most success. Because any challenges that we face today in working through those switches would ultimately be replicated or aggregated times 100 on any other level of scale. So just something I think for us to observe and pick lessons from as we think about that further. Thanks.
Okay, Stephen, licensing
Okay.
passports, good or bad?
Well, I wouldn't say good or bad, but let me just share my own thoughts, and I'm gonna pick from what Doreen and Eric also said. I, I believe that there could be regulations definitely that unite us by the reason of being unified, but there are peculiarities as well because the markets are different. Like Eric mentioned, the population size, the economy size, there's a lot of differences. So we can't pick, like a template to, cookie cut and then shape and then, plan things across the African continent. And to be honest, regulators also need to be educated. I wouldn't blame them in any way because a bulk of the decisions, policies, regulations that they put in place, a number of those also stem out of fear. Of course, there could be the case of having some agenda that may not be healthy, but I mean, a number of those, could stem from fear. Because by the time you hear that, okay, maybe consumers have been defrauded, and you hear, things, maybe there's some kind of loss, or depositors are not able to withdraw their money because something really happened in terms of maybe some liquidity issues, then you find regulators coming in. So they bring in regulations to see how they could hedge against this thing, which somehow can impact innovation, negatively. So, and this is why everyone actually needs to work together. To be honest, there are peculiarities to each of the various markets, and it won't be healthy to just stick to one particular solution. Let me give an example. I think one of the economies in Africa that fascinates me, considering the level of innovation despite the restriction, is Kenya. At the time when the Nigerian finance sector was taken like an upturn, and I can even tell how that really started. Kenya wasn't having really healthy financial system, but some smart guys came together and came up with this ingenious solution called M-Pesa, where your phone number just happened to be your bank account. And that in itself, I consider that a genius solution because it enabled both the bank and the unbanked to be able to get themselves involved in some form of financial services. All right. So it's not an issue of cards or not. I mean, the very first time I went to Kenya, I was actually holding cash. I mean, I felt disappointed. I mean, because this is actually a cashless society. Everyone, including the taxis, are using the M-Pesa to make payments through their mobile phones, and doing the transfers through their mobile devices. All right. Which tells me that, hey, it doesn't have to be what's happening in the West. Right, this is African technology and it works, and everyone is using it, fully widely adopted. Now, the same M-Pesa solution was taken to Ethiopia, and this is recent. And Safaricom basically set up over there, and the people of Ethiopia are basically using M-Pesa just to buy airtime and data. They are not sending money, they are not making payments, they are not doing the things that Kenyans use M-Pesa for. And yes, this is a cash economy, and they don't use much of cards. They use mostly cash. So one would think that you go to an economy like Ethiopia, and then they will fully adopt it. So the markets completely are different. And if it's not innovation until so this is my own concept of innovation. There's no rocket science about it. My own concept of innovation has to be simpler, cheaper, better, smarter, faster. If it doesn't fall into this, it's not innovation. So it's not really about the interest nature or the abracadabra of the tech, right? It has to be simpler. So if it's innovation, it should be simpler, it should be cheaper, it should be better, it should be smarter, it should be faster. Then that's innovation, right? So if it doesn't fall into this, so regulators should ensure that this is enabled. Innovation should be enabled. Make it cheaper for the final, user or the consumer. Make it better and smarter. Definitely, the regulators don't do that directly, However, they could enable businesses, fintechs, payment processing companies to be able to do this in smarter ways. Because, if, for instance, the tax is huge, the person who's going to pay the tax ultimately, don't forget, is the end user or the customer, because the business will transfer that burden to the final user or spread it in some way, right, which increases the burden. Right. In terms of infrastructure, such as maybe electricity or maybe providing, internet data across board or enabling or supporting that, right? The end user will still be the one to feel the impact, right? So, so that we don't make, the whole journey technical, because I know there are a number of persons who are trying to, bring in the whole technicalities around it, which of course impedes that. The whole goal should be, how do we serve the final and unlock wealth for all, including the government, including the regulators, in some way. So in summary is enable innovation, believe a lot in local innovation. That is, it's addressing the local issue, not picking a template that has worked somewhere and thinking it's going to work somewhere else. We need to validate that, ensure that it works, because if it's not actually meeting the needs of people, then they won't embrace the service. If they don't embrace the service, they don't pay for it. They don't pay for the service, it's a useless service, even if it has worked somewhere else. So these are the factors I believe should be considered.
Okay, completely. Now, I don't want to cut anyone off, but we are nearing the end of our time today. So I have one more major question for you. Then I'd like to, at least get one, maybe two, depending on time, questions from the audience. But real quick, each of you, what is your prediction for the fintech industry 10 years into the future? Doreen, we can start with you.
So I'll keep mine to maybe 2 or 3, because I predict there'll be a bit of similarity across the board. I think ESG is going to be an influential factor in how we build and iterate for that last mile, and even, again, getting investment. I think we've learned from, the last couple of years, and, fintechs are now reevaluating their business models to be low cost, high impact, and sort of higher value retention. So higher return on investment over time, because it seems to work. There's going to be a bit of a challenge around navigating cross-border payments for businesses. So there's going to be high uptake by SMEs, which allow for that sort of atomization and customization for the consumer. But also every single fintech is now being challenged to provide the consumer with the kind of UX that they expect. They are the standard setters, they are the rule definers. And with that is going to come increased regulatory scrutiny. But I think also opportunity for collaboration. I'll leave it at that. Thanks.
Okay, Eric?
For me, I do think 2 things. The major one, it's a major prediction, but I do think that Africa will definitely emerge as a global fintech hub, the same way that we have New York, Singapore, and London being sort of like the global financial services hubs. I do expect potentially Lagos or Nairobi will emerge as a global fintech hub for this, driven by a couple of things. So what's most exciting for me being in the space that we are in, and of course, Stephen and Doreen, the same spaces that they're in, is we're starting to see very, very deeper and interesting use cases being built. So you have companies that are building solutions for construction and manufacturing industries that are payment fast, fintech fast, and then they end up again orchestrating the rest of whatever core business that this organization does. And so I do expect majority of that to continue to happen, akin to whatever you have in the US, where you have like a Stripe that does one thing and an Aiden that does another thing and a PayPal that exists and a Venmo. And so I do expect to have a lot of such similar solutions, a lot more payment gateways that are helping, say, a Diageo or a Dangote Industries and their suppliers and buyers to deeply interact. And so that should see the explosion of the industry, and again, our continent having one city as its global fintech hub. What I'm much more excited about is despite what majority of African economies look like right now, is you have a rapidly growing middle class, younger consumers who are, again, whether earning globally or earning locally, but spending a lot more. And again, going to push a lot of stuff around, I mean, a lot of solutions around savings and investments. And so I would put a lot of my bet and a lot of my my crystal ball sort of like says that wealth tech is going to definitely become a very, very huge thing. Folks would want to not just buy global stocks, but it will be interesting to give a Kenyan Gen Z exposure to the Nigerian stock market or indexes in the Johannesburg. And so I do expect wealth tech to become really, really huge and a massive space into it. So those are the two things that I do feel likely going to happen.
Thank you, Eric. Stephen, any predictions?
Well, I can't say specifically these are the predictions, but this I'm very, very sure of. First is there's going to be a rise in the use of digital financial services. And I mean an exponential rise is going to span what we currently have. That one I know for sure, considering the fact that the continent has the youngest population, a very tech-savvy population, young population. Africa currently has 70% of its population between the ages of 16 and 35. That's huge. And this this bracket basically is very tech savvy. Looking at what they're doing now versus what will happen in the next 10 years. I mean, the one who is 16 now will be 26 by then. So you can imagine what the knowledge now will do in terms of impacting. Now consider those, who are earlier generations, I mean, much younger generations than the current young population who were born into this era of technology of the internet. That's all they know, right? And just imagine the mindset and the kind of thinking, the kind of solutions they would create, the kind of solutions they will come up with, and what they will consider fintech when they begin to bring up solutions, because they will be thinking at a much faster pace, considering the kind of world they were born into and what the solutions will be. I also believe that the extent of interoperability will be enhanced, because now we'll be able to achieve a lot more things where cross-border payments will be concerned. On the downside will now be the aspect of fraud, because I mean the level of fraud rates, if we don't do anything about it, will also be heightened. Because now the real theft is not the theft of physical infrastructure, but digital infrastructure, whether it's data or whether it's money or whatever. So that's the downside of things. I'm hoping, I'm not sure of this, but I'm hoping that regulators also will be a lot more enlightened to make better, smarter decisions that can help to scale things, at large across the continent. And I also know one thing, that more wealth will be unlocked. More wealth to be unlocked in Africa, considering the way we are moving. So these are the things I foresee in terms of prediction.
I agree with all of those. I think I may have to sit down after this, re-listen to all of your responses, and make some nice notes on all the different predictions for 10 years from now. But if I do call you in 10 years, we can have another debate on it. What happened, what didn't happen, what's different. All right. Now, I'm going to take two questions real quick. I know everyone has plans, everyone has stuff to do, everyone's busy. So I'm going to take two questions from the audience real quick. So the first one is for Stephen. We've already addressed the second part of this question, but this question is from Ibrahim. I'm going to flash it up real quick. It'll change the screen a little bit. But one of the first part of his question, which is what I wanted to ask, is, can you provide an idea of, explanation of Kora's approach to entering a new country, including any common bottlenecks that you face when you are expanding?
Okay, thank you so much, Andrew. So in terms of getting into any new market, of course, there are bottlenecks. There's the regulatory side, of course. So usually anytime we're entering any new market, we engage consultants, definitely. And we make sure that our actions are data-driven. We have facts that work. We don't just go into any market because we feel like expanding or entering a new market. We allow facts. So there are various metrics and parameters that we look at internally, which we use to guide us. One of such metrics is where our current merchants asking us to take them to. That's one of the metrics. The other metrics we also consider. The next line of that is we have a partner research institute that works with us in helping us to do local research to understand the markets a lot more, from the regulatory side to the customer side to the market side of things. So we go in with facts, with information, viable information, not guesses. So we get into the markets and then we fulfill, the regulatory expectations, definitely we get incorporated, and then we start application for our licenses. In addition to that, to help us better understand the market, instead of just waiting for the completion of the regulatory procedure in terms of getting into the market, we look for local partners that we will partner with to get us to understand the market better and also leverage their own technology, working together so that we can also help to fulfill the obligations of our existing merchants, to also help them to facilitate in the new markets that we're getting into. So first and foremost is to get the facts right. And facts for us is, number one, using the metrics that we use, which includes where our current merchants, asking us to take them to. What are these markets? We have, the list of countries that we plan to get into based on specified metrics that we use to guide our decision. And then next line is to engage our partner research institute to help us, get into these markets, get the actual facts based on numbers, based on data. We use that to make decisions, and then we get into the markets based on our findings. Start the incorporation, get incorporated, and then commence the license facilitation immediately, and then work with local partners to get to understand the market and what we serve our current merchants. I think there's another part of the question. I don't know if I think I answered all right. I'm not sure if I missed anything.
We addressed the second part of the question earlier.
Okay.
But yeah, I think you're 100% right. Moving into any country, you have to have local partners, and you have to spend time yourself on the ground.
Exactly.
You can't run an expansion from London into Uganda. You have to go to Kampala. You have to go up country. You have to, talk with people. I think that's incredibly important. And, I've seen far too many startups which have come out and said, hey, we're going to expand in, 54 countries within 3 years. It's like that. You're going to destroy yourself doing that. Just focus on one or two and perfect it. I think that is really sound advice, especially for people who are looking at building a fintech. Now, I want to jump over to our last question of the day. This one is directed to Doreen. Doreen, I think your response to the cooperation versus competition question earlier got a lot of interest here. But this is a question from Jeff Franklin talking about cooperation in the fintech sector. Is M&A, mergers and acquisitions, part of the collaboration strategy? And if so, are there any common challenges to achieving this?
Okay. So yes, M&As are part of any collaboration strategy. I think Onafriq is a great example of that. We acquired Bionic at some point, acquired GTP, acquired Baxi, and all of this was to diversify the offering, to our partners. I think some of the challenges that people don't necessarily tell you about are things like, because ultimately you're bringing a diverse set of ways of working, cultures, processes, to mention but a few, into one. And the hope is that, the value that you would see from that would kick in, in month one, Q1, year one. But it does take time to merge and aggregate everything on the operation side. You're aggregating systems, you're aggregating culture, people culture, ways of working, processes, policies, historical data. So that is quite a heavy lift. And ultimately building up to a value proposition from this joint, this partnership or these collaborations does take time, because that's sort of where the interoperability piece comes into play. So it is worth doing for sure, because it definitely improves your time to market, diversifies, your offering to your partners, to mention but a few. But it does come with a lot of operational challenges that you do have to be cognizant of going into it. And so I'd highly recommend having conversations around that as you do it, or even before you do it. And ultimately, the people that you acquire or merge with at a senior level will impact how the rest of your business looks going forward. So those are all the pieces to consider, the operational lift of the merger and acquisition. I hope that
Okay,
answered the
well,
question.
it did. Yes, and thank you guys so much, each and every one of you, for joining. I believe everyone here is on LinkedIn. If you have any questions, sure you can send them the question, or on Twitter, wherever people hang out these days. But Doreen, Stephen, Eric, thank you so much for your time today. And for our listeners who may not have caught the whole entire conversation, you can go to our YouTube channel probably within the next 5 minutes, the Kenyan Wall Street YouTube channel, and you can find the full version of today's webinar. But Stephen, Doreen, Eric, thank you guys so much for joining me today. I hope you have an amazing
Thank you
rest
for
of your
having
week.
me.
Thank you.
All right.
Thank you. It was a pleasure. Bye.
Cheers.
Thank you. Bye.